What's up, everybody? It's Brandon Locaron here, and today we're talking about, is the housing market going to crash? So there's been a lot of people coming out and saying housing market is going to crash by 50% next year. This guy named Harry Dent, who's an economist, right? I don't necessarily believe that with his analyzation, but he says that the housing market is going to crash by 50%. And one of the things that he talks about is real estate is the worst asset base to be in. So I'm going to be talking a little bit about that. He says housing is going to go down by 50% next year in 2024. Banks are underwater and they're going to basically have to write down these mortgages, and 50% of mortgages are basically overvalued. And I'm going to talk a little bit about how inventory is actually what is pushing and driving this market. And it's going to be the thing that always drives this market, because there is something that we cannot actually catch up to. So his first claim is housing is the worst asset base to be in, and if you own a home outright, you should sell it and just keep the one with the mortgage. And my thing is you should always leverage each asset to buy more assets, right? And I personally see homes as an asset. So the thing about that is that housing is the most stable thing to be in. Hard assets are the best things to be in because it's actually tactile. You could touch it, you could feel it, you could live in it, you could do something. Anything you can do with tactile investments, it's much different than crypto or stocks or bonds, or the dollar, right? So yes, you can invest in those things. I'm not saying those things are bad, but I believe, for me at least, I believe that you should have most of your assets in housing, in hard assets, or even gold or silver. But the thing with gold and silver is you cannot rent it out, or you cannot send it out and say, hey, go make me some more money, right? That's how the actual banking industry got started. So I think housing is the best asset base because it's land, and land is going to continuously go up in value. It's not going down. It's going to always go up in value because God's not making any more of it. And that's one of the things we have to understand is it's a very limited thing. It's a limited commodity. There's no creating more land, right? We could go mine more gold. We could go mine more silver. We could go print more money. We could do whatever we want. But with homes and land, you cannot buy more, or you cannot build more faster than people need it. So that's the first thing. I think housing is the best asset base to be in. I strongly agree with that. I disagree with Harry Dent because Anyways, so he claims that housing is going to go down by 50% in 2024. And this kind of made me bust out laughing because it's how in the world, what? And he, one of the things he also added in his interview is that it already dropped by 34%. And that's simply not true. The thing about this is housing has not dropped this year by 34%. In some areas it dropped about 8 to 10%, and it's still right around there. But there's still an inventory shortage, right? And I'm going to talk about where that inventory shortage stems from. But the thing about it is housing is not going to go down by 50%. Think about what would happen for land values and home values to just be cut in half. That would have to be something astronomical. We would have bigger problems on our hands, and I think the world will be on fire at that point if that even happened. Because what led up to the 2008 market crash is not only the banks lending money. So that we have to actually go all the way back, right? So what this issue stemmed from is in the 60s, 70s, they legalized abortion, and abortion was something that everyone wanted. Well, at least a lot of people back then wanted a lot of abortions, and they wanted to not have kids, and especially be forced to have kids. So they saw what happened is in the 70s there was there's not a lot of kids being born, right? So because of that, fast forward to 2008 or the early 2000s, that's when banks and builders never slowed down. And one of the rule of thumb is for the housing market, if you want to look and see what the housing market's going to be at in the next 30 years, look at birth rates today, right? So this is us going back to the 70s and saying what were birth rates then compared to the prior years. So builders and banks didn't really take note of that. They just looked and saw oh well, yeah, it's going to keep on increasing. It's going to keep on increasing. Well, it didn't, right? So there's a massive slowdown in birth. And fast forward to the early 2000s, people, there were not enough buyers on the market, because you have to think about the average first time home buyer today. Now it's about 34 years is the average age of a first time home buyer, someone that is buying a home for the first time. Well, back then it was a little bit less, right? So it was probably about 25 years, 22 years. But when this is an issue that kind of stems up, and it leads up to it. But there were not enough adults to be able to buy homes in the early 2000s. So what did the banks have to do to offload this inventory? They had to come up with subprime lending, and it had to do like down and dirty. If you were a nurse, you could buy $1 million home on a $50,000 salary. They didn't, the loans were actually called NINA, no income, no asset, right? Like it's they started doing these just crazy deals, right? And there were a lot of collusion too, because it was very corrupt. So, for instance, like the loan officer would be related to your brother, who was related to, who had an uncle that was an appraiser, and the realtor would be your brother. Like, so you would go after these homes, and then like you would say, oh, I'll get this person in this house. And the loan officer will just kind of fudge the numbers and write it in later, or leave them blank. And the banks are just like, oh, yeah, let's just keep lending money. That's how we make money, right? That's how banks make money. So they're like, oh yeah, absolutely. Let's lend money. And then when those people couldn't pay the loans, guess what? The market tanked, because they had to have a massive sell off. I've talked to people. I wasn't in the industry then, but I've talked to people where they said, like, think of it as like you're nonstop, like phones ringing, and all of a sudden, like, I think like it was I forgot which company, like massive company that went out of business, like Lehman Brothers. When Lehman Brothers went out of business, that was like the first sign, and it was like boom, like the phone just stopped. It was quiet. Like people were like, something is wrong, right? So this is something that stemmed up from it, and it has to do with the birth rates. And then the banks like started being foolish and just very like lackadaisical with lending money. So they had to offload inventory. So what that created actually is, when the market crashed, new home builders who were responsible for a million homes being put on the market every year, they pulled out. They pulled out of the market for about 2 to 3 years. In North America, new home builders are responsible for about a million homes on the market, and that's how much they could build. That's how much they could, sustainably have materials for and whatnot. But when they pulled out, that created an inventory shortage. So as you can see, like, this is all just a ripple effect, right? So ripple effect from the 70s to 2007, 2008, and then to now, where we're seeing about 3.5 million homes in North America that should have been built was never built, because the new home builders pulled out. So because of that inventory shortage, that's what's driving this market. That's what's pushing this home prices continuing to go up. So it's great for homeowners, it's great for investors, because your value of a property is always going to go up, because there's always going to be that shortage. So, and people are like, well, they could just build 3.5 million homes, like, to make up for it. No, they cannot. Like, based on manpower, based on labor costs, based on lumber, and any building material, factories, like, being able to keep up with that, like, yeah, they can do it, but to what extent? Like, they would build 3.5 million homes in 1 year, and then what happens to those jobs? What happens to those factories or lumber yards, right? So it's just not sustainable, and we're never going to be able to build 3.5 million homes in 1 year. Like, that is just ridiculous, right? So we're always playing this catch-up game. We're always playing this game of, oh man, like, how are we gonna solve this issue? And it's not gonna be an issue that's ever gonna be solved, in my opinion. We're always gonna be kicking this can down the road for as long as we can, which that can down the road is just kicking home values up and up. So this is where it stemmed from. I think home values are going to continue to go up. It's not going to crash next year. In some areas, yes, it did go down by about as much as 10 to 15% maybe, but it's since bounced back to be where it's like a negative 8%. In our area, and major growth markets, we've actually seen an increase of 5% year over year, 5 to 8% year over year increase in home values, even with the interest rate being 7.5%, 8%. So think about that when you're thinking about buying a home or really investing in real estate, because there's a lot of people out there that are just trying to scare and fear factor people into into things, and maybe it's because they're just trying to sell another book or sell a course or something like that. But remember, home values are going to continue to go up. The other thing too that he talked about was banks are going to be underwater by 50%. I mean, majority of the banks, I mean, banks right now are very conservative because of what happened to SVB. So a lot of them are staying liquid, is what they called it. So if a bank is liquid, it means that they have a lot of cash on hand, and they're doing their best to make sure that they stay afloat. And this, if the housing market crashed by 50%, that means we're in a much worse position that we were in. I think the world's going to end at that point if that ever happened. But hey, so that's what's really driving the market. I don't see the housing market crashing by 50%. I see it actually continue to go up by 6, 7, 8% next year, especially with the spring market starting now. Like the spring market is actually starting now. We're seeing multiple offers on properties. We're seeing rates drop down. I actually got a quote yesterday on a VA loan, and it was about 6.5%. So remember that home prices are going down. I mean, mortgage rates are going down. Home prices are going to go up because there's a lot of pent up demand from people just waiting to jump into the market that were unable to buy at 8% interest rate or 7% interest rate. So as interest rates drop, you're going to see a lot of buyers flood back to the market, which will then create that more inventory shortage. We're already down by 50% year over year for inventory shortage. So remember that, couple that with people jumping back in. We saw what happened during the pandemic. We saw this is just going to be sort of a repeat of what's happening. So think about that. Real estate is always the best asset class to be in my opinion, because you could use it. There's tax advantages. There's you can rent it out, you own it, and what's better than owning part of the land. So thank you guys for watching. I hope this is helpful and clears up a little bit of the craziness out there. But don't listen to those fear mongers, and I'll see you guys in 2024. Take care.